Hi, Dean Jenkins from FollowMeTrades.com, and this is the weekly market update for the week coming up starting August 30th, 2015. And it's been a wild, wild week, and this is going to be a lot of fun to talk about and to go over. I still have to chuckle when I think back to 6 or 7 weeks ago when I gave a market update. We were still stuck in this channel, and I said, man, the market is boring. And you know, it is not boring anymore. So before we get into the chart updates, I wanted to add a new segment, a new part to my update here, and I call this having some fun with the headlines. So here we go, fun with headlines, and let me know if you like this, if you enjoy this, if you get value out of this part of it, and I'll continue to do it. And if not, well, I'll stop. But let's take a look at some of the headlines. So here we go. Here's the first one on August 24th from The Guardian, and they said China's Black Monday sends the markets reeling across the globe. Well, the markets were kind of reeling, but they're referring to Black Monday, which most people associate with October 19th, 1987, when the Dow lost 22.61% in one trading session, and China lost about 8.5%, so almost about a third of what Black Monday was. And there's another Black Monday, Black Tuesday back in the Great Depression, but that's kind of exacerbating what happened in China. And it just I'm drawing the attention that headlines kind of scream, their journalists' job is to get attention and to get you to read their stories and sell ads, not to give you information to trade on. Here's another good headline. Market turmoil. Dow dives again. Analysts warn of more chaos ahead, from MSNBC. Here from NBC News, the stock market's wild ride is likely just the beginning. This is what the experts are saying. And the Vox steps in and they're going to explain the global stock market crash. Well, let's just pause there for a minute. Global stock market crash. Well, China's market has crashed. China's market's down 50%. But the American market, the Dow Jones Industrial Average, on Monday when it lost 1,000 points at the open, it was down 13.9%. And as of today, it's down 6.62%. That's a correction. That's not a crash. In 2007 to 2009, when we lost over 40%, that's closer to a crash, right? And that was kind of a controlled crash. So let's keep going here. So this was Monday and Tuesday, doom and gloom. The world's coming to an end. The markets have crashed. Here we go. Wednesday, wow, the Dow surges more than 600 points. Third biggest gain ever. Markets break the losing streak. Stocks logged the best day ever in almost 4 years, rebounding from the 6-day slump. And the Dow roars back in a sign of market stabilization. Here comes probably, so you got this picture Monday, Tuesday of doom and gloom, and then Wednesday, oh, it's all okay. Here's probably the most important headline I saw this week, and here it comes spiraling in, right? Chinese equities have lost half their value, $5 trillion since mid-June. That's a crash. That's a big deal. And I said I think about 7 or 8 weeks ago that Greece was a sideshow, right? Back when the China market was losing 2 or 3% per day, the amount they lost in market capitalization was like 6 times the entire Greek GDP. So Greece is more of an emotional issue. China's a big deal, and it will have an impact on global markets. So that was kind of just having some fun. And what I really want to say in having fun with these headlines is we can't trade based on this sensationalization of what's going on in the market. What we need to trade on is to base our trades on the realities of the charts. So let's take a look at some charts. So here's the Dow Industrial daily chart, and it is dramatic. It has been wild, and these are big point moving days. For those of you who've been following me for a while, I've been calling this out for about 6 weeks now. That we had a bearish pattern going on here, and we said we had lower lows, lower highs, lower lows, lower highs, lower lows, and then boom. So I said we were in a bear market. I didn't know it was going to be that dramatic, but there it is. It's probably not over. It's probably not over. I'm saying we're in a bear market. So if we take a look I just shifted to a weekly chart. So every week, every bar here represents a week's worth of time. We were just looking at a chart where every bar showed a day's worth of time. So it's a little bit bigger time frame picture. We've been in a 6-year uptrend. We took out this significant low. This is the new low. And based on my technical analysis, this correction will make it down into this area here between these two blue bars. So between 13,823 and 1164. That's a pretty significant correction. That is a normal, healthy part of a normal, healthy market cycle. So let's pay attention to the realities, right? We are in this bearish trend, and I'm predicting based on my analysis that it will continue. So I'm back to a daily chart now, and this green line right here is a significant level. So this was a very dramatic drop. No question about that. We may see some more rebound off of that, but based on the technical analysis here, at some point this is gonna stall and then work its way back down and eventually take out this low and get down to those levels that I talked about. I do not think it will get above this level here. So this is the key one to watch. One of my subscribers, Sydney, asked a really good question. He said, "Hey Dean, your videos all talk about the Dow Industrials. Why aren't you looking at the S&P 500?" And it's a great question. And I do look at the S&P 500. The Dow Industrials, the pattern's just been super clear and a little bit easier to explain. But I'll go ahead and show the Dow right now. So here's the S&P 500, and you can see it looks very similar. The bullish price pattern wasn't quite as clear and easy to explain. And we haven't taken out this low that was put in back in October of last year yet on the S&P 500, but I'm convinced we will based on the thorough analysis here. And the retracement zone for the S&P, if you're interested, is here, in here between 1853 and 1678. Not quite as deep percentage-wise as the Dow Jones Industrial, but pretty significant correction nonetheless. And I base my trading, I analyze the S&P 500, which is a much broader part of the market, and the Dow Jones, and I look at the Nasdaq as well and figure out the overall market trend, and then base my trades on that information. And based on this analysis of both the Dow Jones and the S&P 500 and the Nasdaq, I began taking shorts 4 or 5 weeks ago, and those shorts are doing amazingly well. They're very profitable. My subscribers who are following my stock picks are making some pretty good profit on those if they're taking those trades. So I'll continue to provide updates, and again, let me know if you like looking at those headlines and having a little bit of commentary. I love getting your questions, your feedback. Email me, dean@followmetrades.com. And thanks for watching, and we will see you next week as this really interesting market continues to play out. Thanks.